Okay, let's have a look at the Euro US for the 25th of November. Now you can see very strong, long, short move yesterday. Not the channel trading strength. We look at normal price moves. Once this sort of thing happens, I pack up and come back the next session. Let's have a look at our first trigger through here. Okay, entry order on that low, reaches down, gets activated. You could have adjusted your entry order to this low if it had not activated the entry order, but for our purposes you can see there that that was a double channel. Then you look for your take profit. C-click, C-click, take profit. Now normally I like to see a 50% mark somewhere inside this price move. Unfortunately, there is none, and this sort of move is uncommon. You tend to see moves structured more along that line where there's pullbacks inside the move. Better off taking profit early, and that is a 19.5 pips, so 18 pips for the first move. Now, I didn't take the next trigger, being here, because I thought it was going higher. Now that is a flawed mindset. You don't know where it's going to go. All you know is a degree of bounce. Okay, the market reached down to that value, bounced there. We're expecting a bounce somewhere in that sort of region. There was the last historical bounce point, CV. There's your trigger. I didn't put an entry order on there because I thought it was going to go higher. That assumption is wrong. You don't know what the future is. All you do know is a high degree of probability of bouncing there, and it should go down to this point. There's your first failure. Not much of a candle, bit of indecision, but still that's the threat. You go to break even and the market runs. Okay. I didn't take that one. I took the next trigger, which was there. I've gone back and put my entry order, CV click to tighten up, on that point there. Activated here, reached up to exactly the point we expected it to, and gone to break even. Now that trade didn't eventuate, so let's have a look at the next short trigger. You can see here, C-click, there's a pullback point. You're looking at a trade somewhere in that zone. There's a good point. There is also a good pivot point. You can see that low, and you can see those two highs. That's the last micro channel at the top. CV click, there's your entry order. Now you can take an entry order off here too. Depends on how aggressive or how cautious you wish to be in your trading. Let's put our entry order there. X click, I'll hide the channel. Now I know this runs, and it runs strongly. That's not how I trade. I don't look for these. They happen occasionally. More often than not, you get price moves, pullbacks, another price move, pullback, price move. Looking for these, like hunting for a white whale. Take your profit. You see, this is your last channel. It broke that. So your choice is either to take that last channel or that last channel. This one is the more conservative. It broke that point. You're expecting to take profits somewhere in this zone. Go back to the last bounce point historically, which is that point, CV. There's your take profit. Okay, which is another 25 pips. That brings you to 43 pips so far for the session. I've taken another trade on the fly in this wick here, and I'll explain why. Okay, everything is about support and resistance, and price action is the only thing you can really rely upon. You can see, if we look back in time, the shoulder of this low. Let's just put a line there so that we can reflect on it. You see the market reached up to this point, broke through, reached down to it twice, went through a little bit, and then took off. Our expectation is that it should bounce somewhere in that line and it should pull back to that line. It's reached up. I've determined that it's a bounce point. So using the historical data, and you can see here, if I put another X, don't be confused by the two lines, that is the price range. We're just looking at a 1 minute chart and looking for highs and lows and close values which give us significance. So I didn't want to miss that bounce. I've taken a trade there. Now, bearing in mind, I'll just leave the trade one single line in there. C-click, C-click. That's where we're expecting it to go. All right, now that's my expectation, but I take profit early. You can see I've got in here, the last channel was C-click, C-click, that's where I take profit. Now, then look back for historical information. There's nothing of substance in through the most recent time period. Now there is bounce points back if you go into higher time frames, but on the 1 minute chart, tighten up, you get a failure there, tighten up your take profit to that value. So your next trade was 23.5 pips, so 22 pips onto that, which brings us up to 65 pips for the session. At this point, I do not look for reversals, and I'm too deep in to the short for looking for pullbacks to get short again. Trading for a reversal is very difficult when the market is trending relatively strongly. You want to look for something that is exhaustive of the move. So something, if we go through here, something like this. Now that doesn't look like an exhaustive low, and so you can see here that looks like an exhaustive low to me. So I'd be starting to look at that as being a trigger for a reversal. You can see that is long past my trading hours. That's the close of Frankfurt, so we're 2 hours into New York. There's the close of London, and the market does indeed reverse. You can use the same trigger system throughout. Just remember that in this time frame, you've got the overlapping US and European sessions, so the moves can get a lot bigger, which means you need to adapt or change your stop losses accordingly. All right, system still works though. If we look here, market has gone from there to there. We'd be expecting a bounce in this zone. Same on the way up. If the market, your expectation would be at least there, but probably higher. The last channel was that, so your expectation is up to somewhere into that zone. Pullback is to here, so the market should go to that. Alrighty, I hope this has been helpful. Do not use the overall channels for your profit taking. You're better off taking small bites. I know that was a pretty accurate or very accurate analysis of that long move in the end of the European session, but I would counsel you to take profit early and take small bites. You shouldn't be forecasting where it's going to go. I made the mistake of not taking that trigger short. I got a second chance. I was lucky to get that second chance, but I thought it was going higher. I don't know where it's going to go any more than you do. I know where it's going to bounce, and I hope that the bounce is sufficient enough to get enough meat in my trade that I sail through with a trade at break even. That long is a perfect example. It didn't pay off in that the market went short, but I don't know that it's not going to go up. I had a trade here and I had a trade there. That trade paid. Alrighty, hope this helps your trading. I'll come back and review the 26th of November tomorrow. Bye for now.